Hey guys and girls, welcome to this week's episode of the No BS With Birchy podcast. I'm your host, Nathan Birch, and this is a show unraveling the truth to the side of the 21st century. We're now exiting the Matrix and waking up to motherfucking reality. Reality, guys, it is Christmas, so Merry Christmas, and I hope everyone's having a bit of time off, a bit of time to relax, a bit of time to reflect on the year that they've had and, working through the goals for next year. And I guess I wanted to do today's podcast. I've got a few little notes here to keep me on track and not going too many different tangents. But I wanted to talk about, predictions and opportunities for 2025. Don't get confused with the Facebook Live that I did recently. I did a Facebook Live a couple of weeks ago that I talked about, opportunities and risks that present. And if you haven't seen that, it might be a good thing. You can find it on our YouTube channel. Maybe we'll put a link in here for you to go and find that video. But I spoke about lots of risks and opportunities, but I'm looking at the predictions. What will 2025 look like at the end of the year? What specific markets are doing specific things? Where can you make money? Where should you be looking to invest and take advantage of in the next year to come? So I guess two main things is, the activity levels and buyer behavior that's happening out there in the market, as well as the inflation that is happening out in the market. Is the inflation going to get any worse? Is it going to get any better? So on and so forth, right? So let's jump straight into it. If we look at, 2024, the year that's gone by, the stock levels in the market, there's been many markets that have doubled, right? If we take a fly around the country, looking at Sydney to start off with, Sydney's been pretty stagnant in a lot of markets. Some of the regional areas in coastal, there's a lot of talk about regional areas going nuts, and I think that there's some that will go nuts. But I've seen some coastal towns come off from their peak. They had the peak throughout Corona and stuff, so there's a bit of softness in some of those coastal towns in New South Wales. Sydney, pretty stable in a lot of markets. There's a lack of stock out there. In some areas of the market, segments of the market, specifically in the higher end market, there's a bit of volatility there, which is what's showing through in those stats that people are referring to, Sydney prices falling, stuff like that. And what you've got to remember on stats, right, and data when they say prices are falling, the average house price is falling, there could be more activity happening in the lower end of the market and less activity happening in the higher end and the market, and it's skewing that data. And the reason why I would see that occurring is for affordability for when it comes to lending, because interest rates have gone up so high, people can't afford to get certain loans at certain levels, and it's pushed more people at the cheaper end of the market, which takes me to my next point of what I'm seeing out in Sydney. There's been many markets throughout the Sydney regions of Sydney, which have seen 20, 30% increases in 2024. So, if we go from all different parts of the market here, there's lots of different things that are happening. If we look at Brisbane's been on a tear, price going up a lot there. Like, I'm looking at places like Woodridge and Logan, right? My good old stomping grounds where I used to pick up properties for 150 grand, 200 grand. They're selling for $500,000 for a townhouse, right? 500,000 for a unit. Houses are selling for $700,000, $800,000 in those regions. And I don't see any value in those levels. It just doesn't stack up for me, and I don't buy them. I've been buying stuff in Brisbane CBD this year for cheaper than what they're selling out in Woodridge and Logan, right? Why the fuck would you go and buy a unit in Woodridge when you can buy in Brisbane CBD a brand new unit for cheaper? So they're just things that I'm looking at from that perspective. There's still opportunities there, but be careful with what you're buying within that market. Gold Coast, crazy. All our investors, we talked about Lotto recently on one of these, right? We look at our investors that bought for 200 grand. They bought 10 of them. They got 2 mil. And they turned it into 600 grand a piece. They're 6 mil. They turned 2 mil into 6 mil. They made $4 million in the last few years just by, pushing a few buttons, buying a few pieces of real estate. So, those markets have gone up. We look at areas like Rockhampton, Gladstone, Cairns, Townsville up there. They've all doubled. Maybe not the median house price or whatever, but the specific stock of good value has all doubled. The bull's out of the gate there. We look around like Darwin, Northern Territory, a lot of activity up there. People think it's, It's crap. Well, it does have its issues, but it is still on the same continent that Sydney's on, right? And it's still on the same continent that Brisbane's on, and still on the same continent that Western Australia's on. So, you know, there's been activity there. I think we'll continue to see some really good activity throughout the course of 2025. Western Australia has done tremendously well this year. All our investors that got in there, very, very good on them. Is there going to be growth in there? I'm buying with caution in there at the moment. Adelaide picked up a fair bit of stock in 2024 in Adelaide and seen some tremendous results there. But once again, the value, has it been all squeezed out of the market? Is there any more value that's left in that market? That's to be questioned. Melbourne has been such great buying there. I love when markets are shit. Thank you. Thank you, Dan Andrews. Thank you, Dan Andrews, for being a commie, totalitarian, dictator, all your bullshit uh, oppression, sort of lobbying and rules and regulations that you've got in Melbourne. Thank you so much, and that's extended to all of the government down in Victoria, because you've created one fucked up situation for people that live in Melbourne, right? And I was surprised because I said some of my views when in Melbourne this year a few months ago, and I got a bit of clapping, and the sentiment was much shared as what I could see from a different state, from an outsider looking in. But that's created opportunities, right? And there's opportunities galore there, and I love that. So I like opportunities. Canberra, who gives a fuck about? There's too many politicians there, right? You don't own the land, and it's not something that I see the value in there. No offense to anyone who lives in Canberra, I've got lots of cool friends down in Canberra, but for value, there's much better value out there in much different other states. And those states range from every corner of the country. It's just pockets within pockets. And Tasmania, I do like the fact that there's some good parts about Tasmania, lowest tax rates, cleaner air, all that sort of stuff. But you're not a part of the mainland. And for me, looking at value in Tasmania versus what I can find in the mainland, I'm finding a lot better value on the mainland. So Tasmania is not something I'll be buying in the current market. Doesn't mean I won't be buying in the future. Seen some declining areas over there, but I'm not finding great enough value to go, hey, let's go double down in Tasmania. So that takes me on to my next sort of part, right? Like, we're looking at these states, there's good things, there's bad things happening. Of a whole, people are looking at like Perth and saying, hey, Western Australia, you're going great, we'll buy anything over there, right? I think that's a scary time when people are doing that stuff, just like it is in certain pockets of Queensland. I'm still buying in those markets. I'm still finding tremendously good value, but I've been seeing this for 20 years, right? And I've been maybe 25 years. I've been looking at the market, maybe 27 years actually. Fuck, I'm getting old, right? I was 13 when I first started liking property and turning 40 this year. So I look at these markets and I see when they go crazy and then come down, and I see there's lots of risk in lots of markets. But within saying that, 10 steps over in that same geographical sort of location, there's screaming opportunities and screaming buyers where either the market hasn't caught up or something is a bit soft or something's a bit off, and that's creating the opportunity there. So be diligent in 2025. Don't just write off a state because something's too hot or something's too low, or think that, oh, this is the best thing because it's so cheap. Cheap doesn't necessarily mean it's of good value. So I've seen a lot of people talking about, they're seeing articles about stats on regional New South Wales or regional Australia and going, oh, we should buy in these sort of regions. And I think I'm a big fan of buying in certain regions for opportunity, but I'm not getting caught up in headlines going, hey, we should buy here, right? If you look at data, let's just say we pull some data out and say Townsville, right? You can say it's gone up tremendously well. Some of the stuff I look at is up 100% in a year. Let's just say it went up 20%. A lot of poor mentality investors, which will get stuck, and I'll explain that in a second, will sit there and go, well, it's gone up a lot, I better buy here, right? I'm sitting here like trying to be smarter than the average bear and thinking of how can I get better value, and I see I can buy in a capital city for cheaper than what I can in Townsville. I'm going to take the capital city any day of the week, right? I don't see the value there. It's stripped away. If everything else was selling for $1 million and there was the opportunity to buy there at 300 grand, well, then maybe I'll look at it and go, hey, there's some value there. So I think have discernment when making decisions in 2025. Um, there is a lot of risk out there. The risk is buying something at the top of a market. And I love nothing I love more in my business or my day-to-day activity than buying a property cheaper in 2025 than what it was in 2005, right? Or 2010, right? And certainly in 2024, I've been able to do that in a lot of markets. In most markets, most properties I bought, I'd say 70% of the properties I bought in 2024 were cheaper than what they were 10 years ago. You don't want to be one of the people that's buying in 2025 and having Birchy and the B.Invested team here in 2030 going, hey, we like buying these areas. We're buying them for 100 grand cheaper than some idiot paid in 2025, right? So that's the reason why I say use discernment when we're making those decisions and taking action. So moving on from the property markets and looking to, geopolitical markets, the larger market abroad and inflation and central banks and geopolitical issues that are out there. There's lots of games at play, and depends what level of TV that you want to tune into and media that you want to buy into. We can sit there and say this is happening today, this is a risk, or shouldn't be doing this because of that. There has been, I think, if I was to turn the TV back to 1985, the year that I was born, that there would have been war games being played in every corner of the world on every year that I've been alive on this planet. Right? You have the mask on, you have the little jabby that's happening. That was a war. You have the war on, it's China, it's Russia, it's Palestine, it's whoever they want to try and create. It's Donald Trump, it's the blue haired, fringe shaved off, hairy armpit crew, right? That's what we're seeing today. But no one's looking back and seeing the war on family unit back in the 1990s, or the war on, the early 2000s, or the war on our technology, right? One of the biggest things that I see as a risk out there at the moment, and this is me going off track, but it's very relevant because it refers back to our stuff I said maybe 3 years ago. There's a war on our children and our social media, right? They're saying you can't be under 16 to be on social media anymore, right? Okay, social media's been around for 20 years, 30 years, right? I was on chat rooms back in the 90s, right? But why are they doing it so much? And that's to usher in a digital identity. And everyone 3 years ago, they were saying this is how it's going to be. These are some risks, whatever. It's not going to happen. It's not going to be like that. And then suddenly, right, without cover charge, enter your ID, right? Everyone goes, oh, my Lord Savior, Elon Musk, right? Right, these fake idols, fake prophets that are out there. And I don't want to get too far into that, right? People are idolizing these Trumps and all that. I'm not against them. I'm not for them, right? I just don't trust the guy that's putting me in a controlled environment, right? I don't trust the guy that's doing the brain chip. I don't trust the guy that's put me in a car that he can turn off if he doesn't like me or what I've said on my social media account. I don't like the guy that just bought the controlled opposition guy that's just bought a social media outlet and is now saying he's going to help humanity, but he's going to be taking the identity and putting it into a digital ID with his digital credit system that's had ties back to very interesting, colourful people that you don't see on the front side. So, yeah, I do see the relevance in that, and I do see the risks around these things because these are all wars that have been taken on in every year that we've existed, right? Whether you see it as a war or not, which war did you wake up in? A lot of people woke up in 2020, right? A lot of people haven't woken up still. A lot of people woke up and they've decided to put themselves back to sleep and buy into the system. So, in 2025, I see a lot more of these things going on, especially as we lose our currencies, especially as we see a lot more famine out there, especially as we see, a lot more pain for people, right? We're seeing civil unrest. We're seeing more break-ins than ever beforehand, right? Areas that were nice are getting violent, right? And I'm not saying we're all living in Detroit, but, look at the data that's out there, understand the stats, speak to police people, speak to community leaders, right, and seeing the home invasions and stuff. Why do these occur? People are poor, people are broke, people are trying to get ahead. Things are changing, people are weaker, right? People aren't on guard. Um, and I see these as, things that people, there's opportunity in that, there's risk in that. And the biggest ones that I see is with inflation. The belief system is that, and the mindset, we'll throw a chart up from the RBA here. I've got it sitting here on my desk. And they're saying it's trimmed mean inflation forecast with a asterisk, right? And I look at words because words are powerful, right? And, the whole mindset behind the English language is very weird things, right? They put behind words. But when they say trimmed, I trimmed my beard this morning, right? Mean, right? Inflation, forecast. They're just potentially, maybe, hopefully, wishy-washy words with lots of big words in there to confuse you, right? They're showing that the inflation here, we look at this chart, has been going down. 2020 it went up, and then it's coming right back off. And there's a lot of truth between some of those things, but like anything, you can see that band of blue there. There's a lot more to this side and a lot more to that side that hasn't been accounted for. And they're saying that, the projection is that you might only lose 2 to 3%. We're going to have a soft landing. I ain't seen no soft landing. I ain't seen, put a little comment below if you've seen inflation more than 3% on something this year, or 5%. Hey, let's make it 10%. What have you seen that's gone up by 10% this year? I was buying some sparkling water last night at the shops, and I've seen those little no-branded, whether it's Coles or Woolworths or IGA or Audi or wherever, they're like 90 cents to 95 cents, 95 cents to $1. Then it sat there for $1 for a while, then went to $1.10, then $1.15. Now it's at $1.20, right? So just 10% is going up 10 cents on that, right? Your block of cheese that went from $5 to $5.50. You can't really get a good block of cheese for under $10 now, right? So who are they kidding us? Where are they pulling these numbers from? How's it impacting you? How's it going to impact your family in 2025? What steps and measures have you put in place to increase your income? All these finance gurus out there say, oh, save a cup of coffee a day. Don't spend $1 on this, right? Save $1 here. Well, it's not about losing your quality of life, right? Losing your quality of life is what a depression is really all about, is losing quality. Whether that's, the quality of what you're getting for your money, the quality of what you're taking home in your shopping trolley. And yeah, what are you doing to make sure that you've got the level of standard of life, the quality of life that you have today, that you've had last year, that you had 5 years ago, 10 years ago? How are you putting that in your life in 2025? Are you growing your own food, right? Doesn't have to be about property. Have you got your own livestock? Have you got some chickens in your house, right? Everyone should have some chickens. Everyone should have, the food that they're most fond of eating, having the staples in their house. Um, you know, how can you sort of combat inflation yourself? For me, I love inflation because all my assets get inflated away, my debt gets dwindled down, my cash flow gets increased. Have you got enough opportunities? If you're not being able to capitalize on inflation, you haven't set yourself up well enough. And there's work that you need to be doing in the coming year to get yourself the assets that are going to cop the brunt of inflation and protect you and your family throughout what we're about to see a greater level of. I think if we look at inflation a bit further whilst we're on the topic and look at the impact on buyers out there, impact on psyche of people that are just buying property in the property market, it is certainly having a massive impact. The quality of people say, oh, the house that I don't get, my parents got a house, so I can only get a little crappy unit. That is devaluation of your currency. That's depression level shit that's happening in front of you. Your parents used to eat steak. You ate sausages growing up and mince. Your kids, they're going to eat fucking fake meat, right? They're going to eat the bugs. Eat the bugs. If you're not following, it's the World Economic Forum saying, they say that people should be eating bugs because they can't grow enough meat for the amount of people that are on population in the earth. So the quality is getting worse. The type of property you're going to end up with is getting worse. And every year that goes by, it's not going to get better. If you're waiting for interest rates to go up and save you, it hasn't worked for you. If you're waiting for something else to come and save you, it's not going to happen, right? Inflation is here. It's baked into every part. Wage growth, commodities, the timber, the concrete, the rocks that go inside the concrete, the asphalt, the bitumen on the road to get to your house for the builder to build, the steel in the building. It's all being inflated away, and that's not something that's going to come back anytime soon. So quality is getting diminishing. What you're going to be able to buy in 2024 is not what you're going to be able to buy in 2025. Do I see an imminent crash? I said in 2017 that we're going to see a mother of all crashes, and if they didn't do something, and I said if they do what I think they're going to do, we're going to see a very interesting crash, and that crash is going to be a hyperinflationary depression. And we're full on track for a hyperinflationary depression, because you can't tell me that the inflation levels, you didn't even know what the word of inflation was going back 5 years ago, but you know what it is now because it's really impacted you. And the depression part is you're going to be able to afford nothing. You're going to be on the food stamp, but you're going to be so wealthy in the process, right? You're going to be earning a lot more money. You're going to be, your property is going to go up in value, but you're going to be on the food line because you can't afford anything because everything's gone up way too high, because people are not wanting currency. They're not wanting to use the currency or keep the currency because it's lost all its value from printing too much of these dollars. So in 2025, I'm going to keep harping on about it. I'm going to keep talking about it as I have done, because that's what's fact and what's true, and what's going to cause this big fuckery of, growth that you've had. I'm so good, my property's doubled in value. No, you just bought a fucking property. You're lucky you bought a property, and inflation's been doing the heavy lifting for you, and everyone's going to get screwed, including myself, on our expenditure bill. So you want to try and keep your expenditure as low as possible, keep your assets growing as far as you can, and capitalizing on that along the way. Looking at properties that will benefit in 2025, I think low value properties at below rebuild cost, very, very important. So anything that you can buy under 500,000, you can't build a unit in 2025 for under 500 grand. Anything that you can buy, established, not established, new, close to new, for under 500 grand, you're gonna look back and go, shit, I wish I could buy under $1 million in that little, out the back in the sticks town. So below rebuild cost, very important to be buying in 2025, no matter where it is, what it is. Cash flowing properties, we're going to see inflation to cash flow, but there is a limit. There's a ceiling. Unlike property, which can be manipulated, the rentals can't be as manipulated. I can't see a way out on the rentals at this point. It will be fixed in the future. But what I mean by that is your house price can go up to the moon, right? Your house price at $600,000 could go to $6 million. And you might say, well, you can't afford it. That's based on a 7% interest rate, right? But if the interest rate went in half, your property could double, because the expenditure that you're paying to service that debt remains the same. So if the interest rate went from 7% down to 3.5%, well, then the repayment will stay the same as what it is today if the property doubled in value. And that's why we'll see a boom when interest rates go in half. But when the interest rates go down to 1% or 0.7%, that property could 10x, because the cost of holding that property is the same. However, when you're looking at a rental perspective, the rents, there's no manipulating factors that you can do to keep the rental in check. So there will be a point where there's a ceiling on rental affordability. That day's not here yet, but be prepared, it will be here. Will we get our last rounds in some of these markets of rent increases in 2025? There's a good chance that it may, right? There's some markets which are so undervalued, it's not funny, right? There's some markets which are rents, I'm like, wow, they're going to go up another $70 next year, $50 a year after, $50 a year after, and they've got a lot more legs to run in them. So just be mindful of that. Focus on assets that have potential to increase your cash flow. Focus on assets that you have below rebuild cost. Focus on the assets that are, just very affordable and good intrinsic value, because that's how you're going to manage your risk. I've said for the last 16 years of running this business at B.Invested that when building a portfolio, it's important to buy the assets that are recession-proof, right? You want a recession-proof property portfolio, a recession-proof asset base. There's people in all different types of struggles out there in the market. People that bought land banking, right? People that bought a property for $1 million, rent for $600 a week. They're feeling the pinch very toughly, right? Those markets are the ones that are in the stats that are showing, hey, there's a bit of softness here, right? The properties that are doubling are those little cheap shit box things that Birchy's been talking about since the day that the camera got put in front of him, right? They're the properties that people are really benefiting by because they're the ones that were built in a recession-proof property portfolio. And that's, the importance on focusing on those right assets. So, yeah, there's different types of markets that will open up in 2025. I'm already seeing it. Migration, follow where migration's going, follow where large infrastructure projects are going. There's infrastructure projects everywhere, but there's infrastructure projects that are going to massively stimulate certain segments and certain pockets of the economy. Whether that be ports, whether it be roads, whether it be rail, whether it be marine projects, whether it be, whatever the projects. If they're sizable, the government's ponting, scheming up that economy, and you'll see a big boom in that. Just like when you see on these charts, we'll bring the inflation forecast back up on the screen, and we see them, we go back and we go, okay, we can see that chart, what it looks like there, and be like, okay, well, what happened at those years for those markets to those sort of things, whether the inflation's gone up or gone down. That's just stimulus packages, whether it be dropping interest rates, builder grants and stuff like that, home builder, JobKeeper, all that sort of shit. There's stimulus packages going all around the country that you're not even seeing, right? There are projects that are happening, government spending that is happening. You need civil contractors, and these projects are not 2 years or 12 months. They're like 5 years, 10 years, 20 years worth of projects that on the tail end of these projects will bring heaps more migration to them. So be on the lookout for those things there. The interest rates, some of my predictions for next year, interest rates, I'm surprised they got to where they are, right? I've said this before, that they can't sustainably have the interest rates go up more than 50 basis points from the start. So basis point, anything over 60 basis points is unsustainable. So the fact that they got them this high, great. The longer that they keep them this high, great. Because that's causing a few things. It's causing high levels of inflation. It's pushing people into the rental market, pushing up your rents. And when they come back and they have to fix this mess, there's a whole shitload more of stimulus packages that they have to put on to fix up the mess that they're creating from these high rates. 2025 is going to be the year that we see that. We've seen all around the world interest rates dropping in 2024. We've seen the US drop multiple times. We've seen Sweden, we've seen Canada, we've seen the UK, we've seen New Zealand, China, Turkey. We've seen interest rates dropping all around the world, right? Australia's rates went up after the other nations did. It's probably natural that they're going to come down afterwards. So, I know a lot of people every month they're paying more on the interest rates and all these sorts of things. Reality is 3 months, 6 months, 12 months of high rates. You're buying a property for 30 years when you're investing. Taking a 12-month view or a 6-month view is very small thinking. It's not, you think you buy a property and the interest rates, it's 2% for the last 5 years. You don't think sometime in the next 30 years that it's going to be 5%, 6%, but it's what happens after that. And the story, I can sit and explain it. I've explained it all the time to you guys, whether it's on these videos, the podcasts, or whatnot. But once it happens, we'll be able to sit there and go, fuck, that actually happened. And it's going to be too late, because as they start dropping rates, this is one of the other things I'm looking at. They're going to drop rates in 2025, and we've seen markets booming and doubling in 2024. What do you think is going to happen to the markets once there's a whole new rush of liquidity coming to these markets? What's going to happen to these markets when all the people that bought properties that doubled in the last 1, 2, or 3 years, they got the equity of hundreds of thousands or millions of dollars or tens of millions of dollars, but they can't service for it. Interest rates come down, they can service for more, they can pull out the equity, they can go and buy more, right? And that'll separate the poor and middle class. The middle class will get wiped out, so there'll be more richer people more poorer people and less in the middle. And that's what's been happening over the last 30, 40 years with our currency. And the gap is getting bigger and bigger and bigger and bigger. And it will change the quality of a lot of people's life. So I'm not trying to sound depressing or miserable or doom and gloomer. I'm very optimistic. I'm very excited with my position and my investors that I work with and represent. And you guys should be excited with the opportunities yourself, what's out there. So, I guess, getting back to the RBA, they know that they're screwed. The first time that they drop their rates, people will realize, hey, they're changing the tide. We're going to see more inflation pile in. And you're going to see, just understand this, if they drop the interest rates and inflation, you go to the servo, you go to the shops, you go buy a can of soft drink, whatever, and you're seeing that inflation in real world push up higher and higher, you know that the RBA has lost the control over the currency that we have using our dollar. So I'm very optimistic for 2025. I think there's lots of opportunities out there. I think there's a lot of risks. I think that the opportunities in 2025 are going to be like the ones in 2024 with a bit of a twist. There's some really surprising factors that happened in 2024, which I could have pictured, and which is why we went into certain markets, we did certain things, and the people that got in there did very, very well out of that. I couldn't have predicted any better or excitable than that. But when I look back and I think, shit, that really just happened. It's like you asked me last year, you're buying in an area for 200 grand, now it's 400 grand. But like, that's what I'm hoping for. That's what I see. But to see it happen, it's like, wow, that just fucking happened, right? So at the end of 2025, I don't think we're going to see much in any of these markets for under $400,000 to $500,000. The old 100 grand properties are now 300 grand. The tides are changing out there. So it makes it harder and harder. You have to put up double the amount of capital if you're paying more for an asset. So just be mindful when you're making decisions, and don't get caught up in the hype side of it by buying something silly with the fear of missing out. So if you need help in planning your strategy and planning your plan of attack for 2025, hit us up. You know where to find us. I'll read out our details in a moment. But if you're one of my investors, that I've worked with over the last 15, 16 years, you got my number, right? All my investors have my number. I work with you guys intimately to get to your goals. Send me a text, give me a buzz, send me an email over the Christmas period. I'm working with my investors over this period of time to help you plan for your next year. So just because everyone else is out there drinking and partying and enjoying the sun and traveling and holidaying and whatever, I'm not drinking or partying. I'm out there enjoying the summer, enjoying the weather, and I'm taking a good 6 weeks, 8 weeks to enjoy that time with family. But I am still working every day, making deals happen and planning and refining. And this time I'm in a really cool spot. So reach out. Let's have discussions. Let's plan for your escape in 2025 and to take advantage of the opportunities out there. If you're new to this channel or want some help or want to plan your 2025, beat us up 1300-367-925, admin at B.Invested.com.au. And please, guys, leave some comments below of what content you want to see coming from me in 2025. You can find us on Google Play, Apple Play, Spotify, and YouTube every Thursday. Catch up soon. Have a great week. Have a great 2025 too. Bye for now.
Like Bilal said, man, we stuck in the matrix. This my advice, don't care if you take it. The dollar back to die, soon to be hyperinflated.